in this video I want to focus on FX trading, and the topic, like I said earlier, is about market manipulation. Now I get a lot of questions all the time, especially when I do webinars, in my comments on YouTube and Facebook and Instagram as well. I know a lot of traders are complaining that they're getting stopped out and they feel like it's their brokers who are stopping them out. A lot of FX guys, believe you me, 75% of FX traders feel like every time they get stopped out is because of somebody somewhere or because of their broker or what have you not. So I wanted to take my time out to actually explain to you guys what market manipulation is all about, right? I'm going to be taking you into my screen and I'm going to be showing you real life examples as to when even I personally was a victim of market manipulation, and how I want you guys to actually perceive market manipulation. Who is behind market manipulation? Guys, you'll be very, very surprised. So don't go anywhere. I'm going to take you guys into my screen right about now. Hey guys, and welcome inside of my screen. So I'm going to be using, obviously you guys know I like to use TradingView for my analysis. So I'm going to be using this blank portion of TradingView to really explain to you guys the concept of market manipulation. Okay, so like I said earlier, a lot of traders feel like somebody's after them, maybe they're a broker, or they just feel haunted by the market. Okay, and a lot of you guys have come across the term market manipulation, somebody's manipulating the market and stuff like that. So I want to use this to illustrate and demonstrate what actually takes place when market manipulation happens. Okay, so this is what a typical market manipulation trade will look like, right? So ideally, okay, you probably usually have a resistance level like here, okay, right? You have a resistance level about here, okay, and the market is coming this way, okay, and then you see a pullback this way, right, and then the market heads up back into resistance again, right? So usually what tends to happen is this, right? Most traders want to start selling at the resistance zone about here. So what will tend to happen around this region, because most of the courses you take, that's why I don't believe in those other newbie courses and stuff like that. Most of the books you read, this is a perfect double top formation setup, right? So about here is where you would most likely be looking to get into the market, right? And then what tends to happen is this: the market will then show you signs of, that yes, indeed, it wants to start coming off this level. For most traders, the market doesn't even show them signs. What they do is they come and put an order here. Why? Because they strongly believe in this level. Okay, so they put a sell order somewhere about here, right? A sell order somewhere about here. So what tends to happen is, before the market or they put it right on top of the resistance level. Okay, so before the market even gets to the resistance level, okay, before the market even gets to the resistance level, your sell trade has been triggered. Okay, so your sell trade triggered, quite all right. And then because this is a major resistance level, most of the time you're expecting this to the downside, right? So you want to get in here, and then your stop losses, right, come above the resistance level. Like, this is a typical way to trade the market. I mean, there's nothing wrong with this, okay, because this is the way we've been taught how to trade. Our mentors, our this, our that, even I was taught how to trade this way, right? And then what happens usually is you get into a sell trade here, and then the market now pushes above here and stops you out. And then most oftentimes than not, then after you get stopped out, the market now drops all the way to the bottom. You see, this portion right here is known as the manipulation zone. What they have come to do here is price has come and has violated what is supposed to be a strong resistance level, okay, that everybody can see. Price has come and has manipulated this level, taking out people's stops, and then dropped down. Now, what I want to do here is I want to explain to you why this happens. Okay? Now, first things first, it's not your broker that is running the stops. I want to clear that out. Your broker really has nothing to do with this. If your broker is going to manipulate price, they will probably manipulate their spread. Okay, so they might widen their spread. Maybe you're used to a typical spread of about 0.8 pips. They might widen their spread to maybe double of that, which is 1.6 to 2 pips. 2 pips is not enough to manipulate your is not enough to manipulate your trade, or is not enough to manipulate a major level like this. Let me explain to you who is responsible for market manipulation in situations like this. The people that are responsible for market manipulation in situations like this are people such as the investment banks, the hedge funds, the people, the sophisticated investors who have a lot of capital, the massive banks. And why and how does this occur? Now, guys, I want you to pay very close attention to what I'm about to show you guys and what I'm going to say to you guys right about here. Okay, so give me a second. Let me just adjust this. Okay, so now I want you to really listen to what I'm saying. Now, this market gets here. Okay, the big boys, the investment banks, the hedge funds, they want to sell here because at the end of the day, if you noticed, when market manipulation happens, the market ends up going in your direction. Remember that. There are times where I see people like, oh, I was right, like I predicted it right, and then the market just went crazy. Like I sold the market and then it stopped me up before it went in my direction. I get this all the damn time. I'm used to hearing it, right? So what actually happened was they actually want to sell the market. Okay, they want the market to come down. However, they have an issue. They have an issue. Now, they have, let's say, about $300 million worth of orders to fulfill. I'll take that again. Let's say they have about 300 million US dollars that they want to sell. Like they have a sell order worth of $300 million that they want to drop on this market. Okay, and then when they come on their platform, they can see that everybody has sell orders here too. All the retail guys, because this is a major resistance level. Everybody is thinking sell. They want to sell too. Okay, are we on the same page? You want to sell, I want to sell, they want to sell. And then they come here. Obviously, everybody has put their sell orders here. Their sell stops are about this region or right here, right? And then they just make sure this is recorded, all right? Fine. So, and then they're like, okay, but they want to drop a $300 million sell order here. Now, guys, you have to understand that there are two sides of the market. If people are selling, they have to be buyers. I'll take that again. If you want to short sell the market, there has to be an opposing side of the market whereby somebody has to be willing to buy. Okay, and then but they come and they see they come here and then they see that, you know, there are not that many people willing to buy here because everybody's thinking sell. So you know what they do? They allow the market get to this region about here. Okay, they allow the market get to this region about here, and then they say, okay, what is going to happen is they will spend out of their $300 million, because before I even get into that, I want you to understand something. The reason why they don't want to drop the entire $300 million worth of sell orders here is because once the market gets here, listen, once the market gets here and they start to sell that massive order, they might not be able to fulfill all their trades until the market gets about somewhere down here. By the time the market gets here, that's not a good enough price for them. They want to, because you have to understand that, guys, most of these banks, most of these hedge funds, they are fulfilling orders on behalf of even bigger clients. So they have to get the best price. Guys, this is not technical analysis. This is now we're going into the fundamentals of the market. So I need you guys to understand this, right? they are fulfilling orders on behalf of bigger clients. So they have to ensure that they get the best price possible for their clients. So you have to understand that this is, like I was saying, is the fundamentals of the market. These are things you need to understand. They will help you. Okay, so the banks, or rather the investment houses, the hedge funds, they have the obligation to fulfill at the best price possible. If they drop their entire $300 million sell order about here, the market will end up falling here before they fulfill all their orders, and their clients are not going to be happy with them. So what they will do instead is this. They will wait for the market to get to that major area, okay, that major area, and they will take about $20 million to $30 million of their $300 million order, and they will induce a buy trade at this region here. Now, this is where it gets really interesting. When they induce a buy order about here, you tend to see the market spike up further. Now, you're probably wondering, why are they inducing a buy order? Now, guys, think about this. You have a sell order here, but at the same time, you also have a stop loss here. Okay? Now, what is the opposite side of your sell trade? So you have a sell trade. When you want to come out of the sell trade, yes, it is called close trade. But what is inside of your close trade? What is the opposite of your sell trade? It's actually a buy trade. In order for you to close a sell trade, when you click close, what the broker is actually doing is it is countering with a buy trade. Are you guys understanding where I'm coming from? Okay, it is countering with a buy trade. So you have a sell trade. Your stop loss of your sell trade is a buy order, right about there, right? Yes, it closes the trade. However, the content of your stop loss is the opposing side of the current trade that you're in. So what they've done here is they've pushed the market beyond all this sea of sell orders, pushed it up to go and trigger everybody's stop loss. Why? Because they can see everybody's selling here, but above all the sales are a sea of stop losses that have buy content. Inside of the stop losses are, so what they can see here is sales, and they can see a lot of buy orders here, which you can see as stop losses. Apart from your stop losses, you have to remember that there are also the other kind of traders who actually have buy orders here, because you have to understand that there are breakout traders as well. There are traders who have said, you know what, if we break this resistance and we can't stay below it, that means the market wants to start heading higher. So they've gone to put their buy orders here. So what we have here in essence is a sea of buy orders, from people who have stop losses to people who have buy orders. Now guys, guess what? This is good news for them, because what? They have pushed the market into an area whereby they can now fulfill all their sell trades that are inside of them. They have $300 million worth of trades they want to sell. They have used 20 million to induce all these buyers to come into this market. Okay, so they've spent 20 million, so they have about $280 million left. They've pushed the market up about here. Everybody is now buying. We have a lot of buy orders. Now they will now come and drop the remainder of their $270 million worth of sell orders. So they will now be able to fulfill it at a very good price somewhere about here. So guys, this is exactly what happens when market manipulation occurs. Okay, you can flip the explanation the other way around. Actually, I'll do another explanation flipping this the other way, and I'm going to show you guys some examples when this happens. So guys, the question is, what do you do in situations like this? Now, two things you can do. First of all, this is why I always tell my students on the Forex Mastery program, do not sell at resistance level. It is a taboo to sell at resistance levels. What we do is we like to wait for a bounce. You can watch all my other videos. I speak about this a lot, blah 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 blah. You will never catch me selling at a resistance level. I need to see the market come back off of this level, bounce off of. So you might come here and bounce, you might come wherever it is. You would, so And guys, let me finish one thing first. So guys, we will not sell at this region. We will wait for the market to come play around here and then come back down here. Guys, I've been doing this for 8 years now, and literally just by looking at the market, I can tell when market manipulation wants to occur. Okay, usually I even like it when market manipulation occurs. Why? Because that means that the chances of me getting stopped out are very slim. Why is this the case? Because the worst has happened. Think about it. The worst has happened. Okay, you've run everybody else's stops. You have now decided to come and drop your orders all the way down here. Chances are that the market is going to continue heading lower. So most of the time I like to watch and wait for I like to call them the dumb money. Okay, I consider myself a smart money trader. This is why you need to be very patient. I wait. Give me a direction. If you want to fly all the way to the upside, you do that. However, I'm interested in selling. I would only sell when I see a push into this region, maybe a stop loss run. I love stop loss runs. Run their stops. Run the stops, and then once the market is about to start coming down again, this is exactly where I like to come and sell the market, and then my stop losses go above previous high. And then guys, this is exactly how you go about being 95% correct. Okay, so I hope I've been able to use this to explain to you guys the concept of market manipulation. It actually comes from the massive hedge funds, the investment managers, the people who have a lot of money, because they want to fulfill their orders at the best price possible. Okay, so I'm going to take you guys to some examples. I've taken a couple of screenshots. Just give me some time. I'm going to have to flip my screen. All right guys, so let's get into the very first example. Right, as you can see, you can probably already see what I'm talking about. This right here, I saw this nice downtrend that I was looking at. I was actually very bearish on the GBP USD around this time, so the market came below. I was expecting a pullback into resistance so that we can start selling below. And as you can see guys, clearly, very clearly, very clearly, sorry about this. Okay, as you can see very clearly on my right hand side about here, the market tested this level here. A lot of traders were expecting to sell. Actually, some traders already started selling at this, because this is support turn resistance. All the selling started taking place here. The market, the investment banks wanted to send this market lower. Everybody knew this market was going to come lower, but look what happened. Run the stops, and immediately what happens? The market comes back below. So what you want to do here is this: never trade here. Wait for the market to either run the stops or give you a very confident movement like so. So guys, trust me, once this happened, I was very happy. Because why was I very happy? I was happy because I knew that the worst had happened. The stops had been run. And then the market comes back down here and closes here. This is exactly where I sold my market, and this is exactly where my stop loss went to. Nobody tells you this, okay? You hear it from me, DAPO Willis. I'll tell you exactly how it's done, okay? So this is exactly what market manipulation looks like, because a lot of people are like, I sold here, and then I got stopped out. And then the market still went in my direction. Yes, happens very often, and this is exactly what happens. So do not sell at resistance levels or support levels. Allow the market to commit to you with a bearish or bullish engulfing candle just like this. Either you allow the market run the stops, or you wait for the market to give you a confirmation, a bounce off of this level. And this is exactly where I sold. And then you can see how much. This is a 4-hour chart, by the way. This was a lot of pips to the downside. So guys, this is the very first example. Let me see if I can minimize and take you guys to the next example, which is about here. I believe you guys should be able to see my screen right about now. So guys, this was another trade that I placed. Actually, what's very funny is if you scroll down to my YouTube channel, I did an analysis on this whereby I predicted about 1,000 pips into the future. So what happened was I was expecting, so there was a minor support level about here. I told everybody, I came here, did an analysis. I said, once we break down here, sell. So my sell positions were about here. The market and my entire tick, this is a daily chart, by the way. So between here to here, you're looking at about 700 pips, right? It's a lot of pips that we're about to bank, okay? So I said, you know what? What's going to happen is this. Once we clear here, once we clear this minor support, guys, sells come here. So we sold the trade. I was in a sell position. First day profit, second day profit, third day the market was a bit confused. And then what happened was I started to see the market pull back. Not only did we pull back, bam, I saw this. Okay, I saw this right about here. I saw this. I'm like, okay, that's fine. Let's be watching to see what happens. And then the market, you know, 1, 2, on the third day again, we have this massive push to the upside. And at this point, my stop losses were about here. And this is exactly where I got stopped out. I got stopped out, okay? But I said to myself, okay, maybe the market has other plans. Maybe it wants to start heading to the upside. But guess what, guys? I checked the exact day. Now, this is why this is very important. I checked the exact day of this candle, and it was non-farm payroll Friday. Guys, another thing that a lot of these market makers tend to do, a lot of these big boys tend to do, is they use fundamental reasons to manipulate the market, such as non-farm payroll, all these news you see on Forex Factory and stuff like that. But guys, guess what happened? After market manipulation, the market always corrects. So after I got stopped out, I came and made an announcement on my Instagram, my YouTube. I said, listen, guys, I can see that the market has actually come to test the outer part of this trend line. If indeed we come back into the area that we sold before with a couple of red candles, what this simply means is that this was nothing but a market manipulation. And that's exactly how we entered another sell trade again. And that's how we're able to make the pips all the way down here for about 700 whole pips. So guys, I'm just showing you guys examples of how exactly you go about combating market manipulation, okay? Even if you get stopped out and then you see the market come back down below or higher than that level that you trusted so much, and then you see the market come back, feel free to get back into the trade and then put your stop losses above previous highs. But the golden rule is this: do not sell at a resistance level and do not buy at a support level. All right, guys, I'm going to take you out from here. Thank you very much. This is my time. I love you guys. So there you go, guys. That is the definition of market manipulation. I've been able to show you that your brokers are not responsible. Actually, who's responsible are the investment banks, the people who have massive orders and they need to fill their orders. So guys, I hope I've been able to explain to you guys and shed some light on the myth behind market manipulation. Take it easy and peace out.